Monetary Policy Committee justified decision to hold key lending rate at 14% as Bank of Ghana warns Middle East conflict could reignite global inflation and threaten Ghana's economic recovery.
Up to this time, one is not sure whether it's a temporary crisis or whether it's going to be a long-lasting one. If we assume that it will be a longer-lasting one, then you can imagine the impact on inflation expectations.
Also, pressure group ISODEC questions Ghana's decision to seek new IMF policy coordination instruments after exiting $3 billion bailout program.
They are coming to pursue policies that will not target unemployment. They are coming to say that they want to make sure they enhance economic growth, but this is a jobless growth.
Plus, Ghana Revenue Authority GRA cracks down on tax evasion as multiple businesses at Sprinters and Oyare in Accra cited for non-compliance.
Bayou Villa. The receipts are in Chinese, and the official language for this country is English. So when you are keeping records, you must keep the records in English.
We have details of these and many more coming out shortly. Stay with us. Thanks for your time as always. And now, the Bank of Ghana has maintained the monetary policy rate at 14%, citing growing global uncertainty linked to escalating geopolitical tensions in the Middle East. Governor of the Central Bank, Dr. Johnson Isiama, says although Ghana's economy continues to recover strongly, rising crude oil prices, global inflation pressures, and possible tightening of financial conditions remain major risks to the country's inflation and growth outlook. My colleague Besmak Awusa has more in the following report.
Addressing the 130th MPC press briefing in Accra, Governor Dr. Johnson Isiama said the conflict has disrupted global trade flows, increased crude oil prices, and heightened inflation risks across advanced and emerging economies, hence the committee's decision to hold the rate.
The committee evaluated other forms of risks. The elephant in the room here is the Middle East crisis. Up to this time, one is not sure whether it's a temporary crisis or whether it's going to be a long-lasting one. If we assume that it will be a longer-lasting one, then you can imagine the impact on inflation expectations or the so-called second-round effects.
The governor, however, noted that Ghana's economy remained resilient in the first quarter of 2026, supported by stronger private sector activity, improved banking sector performance, and rising external reserves. Governor Dr. Johnson Isiama also announced an additional policy measure aimed at strengthening liquidity management in the banking sector.
We think that it's about time we reviewed that, considering the outcomes that we have observed. And in the wisdom of the committee, we think that this will go a long way to complement, our open market operations. Remember, our objective is to maintain an appropriate, policy stance, the so-called liquidity conditions. That's how we are able to impact on our transmission.
The next Monetary Policy Committee meeting is scheduled for July 20 to 22, 2026.
And that was a report by my colleague Besmak Awusa, Monetary Policy Committee of the Bank of Ghana, justifying a decision to hold the policy rate at 14%. And our pressure group, the Integrated Social Development Center, ISODEC, is questioning government decision to seek a new International Monetary Fund policy coordination instrument shortly after Ghana concluded its $3 billion extended credit facility program with the IMF in May this year. There's more in the following report.
The group argues that the new arrangement could extend IMF influence over Ghana's fiscal policy despite the country's exit from the bailout program, insisting government must instead prioritize domestic resource mobilization, industrial transformation, and the fight against illicit financial flows. Head of Policy and Programs at ISODEC, Bernard Anaba, says the proposed arrangement amounts to continued economic oversight by the IMF.
We have a problem in terms of our domestic capital markets. We haven't been able to appropriately develop our domestic capital market to be able to mobilize resources from within. We are hemorrhaging, losing resources through illicit financial flows.
Policy analyst Dr. Adams Brima Abile also believes Ghana's economic recovery should be driven by alternative fiscal policies focused on employment creation and productive investment.
They are coming to pursue policies that will not target unemployment. They are coming to say that they want to make sure they enhance economic growth, but this is a jobless growth. Why don't we start the conversation to preempt and say that let's also mix our policy choices with heterodox economic policies and see what outcome we'll get.
Meanwhile, policy analyst in charge of illicit financial flows, Charlotte Bogli Jade, argues that billions lost through illicit financial flows continues to undermine Ghana's domestic revenue potential and increase pressure for foreign borrowing.
Ghana should be building domestic fiscal capacity through structural transformation policies, such as expanding the tax base by formalizing the economy, clouding the resource leakages through illicit financial flows, investing in productive sectors that reduce import dependency.
And that was a report on Pressure Group ICT questioning government decision to seek a new International Monetary Fund policy coordination instrument. Well, if you just tuned in, you are listening to the Business News on Sunrise 92.7 with me, George Kwaning. More news this morning. The Ghana Revenue Authority (GRA) intensified its enforcement drive on May 20, 2026, targeting major commercial hubs in Springtest Airport and Oyarifa in Accra to plug critical revenue leakages. And the exercise, which focused on VAT compliance, resulted in some businesses being cited for various infractions and one establishment being sealed off.
The GRA enforcement team, led by Assistant Commissioner in charge of Accra Area Enforcement, Joseph Annan, began the day's operations at Spinters, where they visited Strong Machine Company Limited. From there, the enforcement team moved to the airport enclave to Bayou Villa, a restaurant facility. The two companies were cited for selective issuance of VAT invoice.
Strong Machine Company Limited. They are into heavy equipment, like tractors, Caterpillar, and the rest. We have picked some records and their machine. We are taking it to the office, extract the information that we will need for our preemptive assessment. Bayou Villa. And for them, the receipts are in Chinese. And if you look at our Revenue Administration Act, Section 20, spells it out clearly that the official language for this country is English. So when you are keeping records, you must keep the records in English.
The operation moved to Oyarifa, where the team visited an industrial enclave. Nyankunton Building Materials and Hardware Enterprise was cited for total non-compliance and the place was sealed off. H.E. Jens Company Limited at Oyarifa was cited for selective issuance of VAT invoice.
Nyankunton Building Materials. And for them, no records at all. In fact, we are taking the gentleman we met, who is a Chinese, to our office for further interrogation, because we need records to work with. We have sealed off the place. Same yard, H.E. Jens Company Limited. They are into manufacture of polythene bags. They are also doing selective issuance. We have picked their records, and we are going to go into the records and assess them preemptively.
The story was different at Stone Depot at Oyarifa.
Stone Depot, that is also Oyarifa, where we are standing now. They are into sales of marble. They are on EVAT. And so far, what we have seen is that they are compliant.
The authority maintains that the deployment of its enforcement teams will continue indefinitely until high levels of compliance are achieved across all sectors across the country.
And on Ghana's producer, inflation rose to 2.7% in April 2026, signaling renewed cost pressures across key parts of the economy and raising questions about whether higher production costs could eventually feed into consumer prices. The latest data from the Ghana Statistical Service showed that year-on-year producer inflation increased from 1.6% in March 2026 to 2.7% in April, representing 1.1 percentage point rise within a month. The April figure was, however, 15.9 percentage points lower than the producer inflation rate recorded in April 2025. And now let's take a look at how the city is faring against other major trading currencies and how some key commodities are also faring on the global market.
At the interbank foreign exchange market, the dollar is selling at 11 cedis, 56 pesos. It gained 4 pesos. The British pound is selling at 15 cedis, 54 pesos. It gained 10 pesos. The euro is selling at 13 cedis, 43 pesos. It also gained 6 pesos. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities market, Brent crude is trading at $104.68 per barrel. Gold is trading at $4,541.13 per ounce, up by $58.52. Cocoa is trading at $3,889 per ton, down by $18.
And that was an update from the forest and community market, and that's how we end the business news here on Sunrise. For more news updates, just log on to our website, s3news.com. It's always a pleasure coming your way. Morning.